Yeah, thanks, Ruben. I'm just going to go through some of the trade recommendations that I think are going to be most profitable moving into 2017, particularly into around the second quarter of next year. So I've clearly leveraged a lot of what our economists have been saying in terms of the China outlook, Singapore, the differential in terms of growth and macro fundamentals of Southeast Asia, broadly speaking, versus Northeast Asia. I'd say firstly the recommendation that we are, having if you want to say the highest conviction on is to be short CNH against the dollar. This is something which we expect to perform very well. We're looking at a target of around 7.25 by the second quarter of next year. So, definitely beating what the forward market is pricing in, giving us, total returns just over 3%. And just to highlight very quickly, given the time limitation, just very quickly on why we have high conviction in this view. I think, firstly, from the global side, clearly what's happening in the U.S. political front, the risks around this with Trump and China, Fed policy risks, broader European political concerns as we move into next year. These are some of the factors that we're looking at that could impact on renminbi and, of course, strengthen the dollar. I just mentioned very quickly that, we are also expecting dollar yen to be at 120 by the end of next year, which clearly adds to the upside momentum in dollar CNH. Within China itself, what Yang mentioned, I think, is extremely powerful in terms of the capital outflow story in China. And as far as we are concerned, we're still seeing very substantial capital outflow. And that's something we do expect to continue over the medium term. It's a very powerful driver of, if we want to say, dollar China higher, this diversification from locals into foreign assets. And then one other point I just want to mention is there is, and I'm sure everyone on the call is aware that there's this push for greater flexibility of the currency as well. I would say that with the combination of a currency that's overvalued, capital outflows, the kind of challenging global backdrop that we have, implies to me that renminbi will depreciate quite significantly to 7.25. So the second recommendation, just go through quite quickly, is to be long dollar Sing. So we're targeting 1.48 by the second quarter of next year. And again, that's going to give you quite high total returns, around 3.4%. Just to highlight some of the rationale, globally, clearly what I mentioned on China is also very applicable to Singapore. Regionally, there is a quite strong relationship of Malaysia and Indonesia with Singapore, trade links, financial links, and clearly there are some concerns over the financial markets in both Malaysia and Indonesia. So that could pass through to Singapore. Singapore could be somewhat viewed as a proxy. Then the other regional factor is the corporate earnings dependence on China as well, and then of course the financial linkages to China. And if China is facing some downside risks, I think the market has priced in only really good news at this point in time. If there are downside risks that emerge, then of course that could feed through to Singapore as well. And then just to highlight locally within Singapore, we're still assigning around a 30% chance, 30% chance of MES shifting FX policy in April next year. And part of that rationale is just really the view from Nomura of weak growth. Yuben didn't have the chance, but he's forecasting 0.7% GDP growth in Singapore, which is below the MPI's 1 to 3% expectation for next year. So I think global, regional, local factors give us quite high conviction to be long dollar Sing. And just to highlight, lastly, very quickly what Rob mentioned about this divergence theme that is starting to build, and I think will continue to build as we move into next year as well, between North and Southeast Asia. We are currently recommending to be long India rupee, Philippine peso, Thai baht, and that against being short CNH and Korean won. We think this relative value basket makes a lot of sense at this point in time. We've got strong macro story in India and in Philippines. In Thailand, the macro is not strong, but the flow dynamics are strong. And then, of course, Northeast Asia has all its challenges, partly from the global backdrop, but also from China itself.